afternoon, ladies and gentlemen. Happy FOMC day. I hope you guys are excited for a very, very interesting afternoon over here where we are going to get the interest rate decision, the new summary of economic projections, and then at 2:30 p.m. Eastern, we are going to be getting the Q&A session and the prepared remarks from Jerome Powell. We have a lot to cover before everything kind of kicks off. That's why we're live here at 1:30. And all of you guys in the Discord made me go live this morning to basically just hear me say, chart looks great, but we have to wait until after Powell. So team, hopefully you guys are having a great day, had a great start to the week. We've been crushing it. Hopefully you guys have been as well. But it is that time of day. It is good afternoon. Say good morning or good afternoon to somebody in the live chat. If you guys would like to say good afternoon to me, I'd love to receive some good afternoons over here. If you guys are new to the stream, let me know. I'd love to welcome you guys in here. And as always, ladies and gentlemen, and especially on a Jerome Powell day, make sure you guys are hitting that like button on the way in. Helps out a whole lot, spreading these streams out to some more people so that we can get everybody on the same page with the accurate and correct information. After this information ends up coming out, let's see who we have in here. Let's get after it this afternoon. Probably not going to do much in terms of trading. If you do, you're an insane person, and you probably just love to gamble. So let's see. Here we go, ladies and gentlemen. We have Samuel, Muhammad, Ben, Sadie, Daly, Taylor, Caesar, Andrew, Eddie, Michael, Rogue, Leash. Let's see. Eddie, Wreck-It Ralph, Andrew, Moto, Dan, Nick, Judy. Good afternoon, everybody. And again, team, you guys are slacking hard on the like button. I see how it is on a Powell day. Yeehaw. What's up, Nick? How you doing? So the only thing I really have right now is the Airbnb. Gonna see what happens with this. The Ulta trade, we can go over some of the trades that we've had this week for those of you guys that are in the or are not in the Discord. So Ulta over here, really, really, really epic trade here. That was on the weekly watches that I send out every single week. Obviously, you guys get those every week, but I actually cut this one a little bit early at around like 394, 394.50 right in here yesterday, just because I didn't want to hold too many things going into Powell. Visa is another one from this week. I haven't even looked at this one today, but yeah, Visa was another one. Cut this one yesterday. This was another absolutely epic one from this week. What else? I mean, the 6,000% Oracle trade that we had last week. We had the MNST. This one was a filthy one last week. The Walmart, which was an absolutely epic one over here. Dude, we have been on an absolute ripper in the month of September, and I don't see it slowing down anytime soon. There are a lot of charts that I find incredibly interesting right now, but we just have to wait until after Powell. Give it a couple of, Give it a couple of hours, maybe a day or two, and then we're going to be able to start firing again. Did I sell any cash secured puts? Nah, I didn't do any of that. I'm not really looking for much here. I did end up scaling into the Beto, though. So those of you guys in the Discord, remember the stream this morning when we were talking about the ideas that we have. There's going to be a lot of new narratives that are going to form after we start this rate cutting cycle. And one of the things that I think could get really interesting is Bitcoin. So I did start a little starter on that thing. That's got a lot of time on it. So we're going to see what happens with that. I'll give you guys a little freebie here. I am looking at SMCI. This is another interesting one. I got to check back in on Mara, but yeah, Mara is still looking really, really, really spicy over here. Really spicy. So let's kind of cover a couple of things here. Just looking towards FOMC and Powell. You guys saw the video last night, which I think most of you guys did. The Nikki Leaks comment from yesterday was really leaning towards that 50 basis point cut. Now, when we look at the Fed Watch tool over here, it is showing us, if this thing loads back up, 61% probability. Oh, that shifted back because it was 50-50 a little while ago. About a 61% probability of a 50 basis point cut. Now, what you have to remember is that 50 or 25 right now, and I tweeted this out, it doesn't really matter. What matters is how the summary of economic projections comes out. And how does that compare to the last round of the SEP that we got this June, sorry. We had GDP, I believe, was for the end of the year was looking at 2.1%. I'm not necessarily, I'd have to take a look again to see what the inflation expectations and the unemployment rate numbers would be. But Powell's tone is going to be incredibly important as well, because if you have Powell come out and say, and do a 50 basis point cut, and he says, oh, everything is fine, I mean, the market might react positively, but if he does a 50 and says the conditions are worsening, the consumer is struggling, we don't see a lot of growth, which I don't really see a reason why they wouldn't say that right now, especially after yesterday. Out of Atlanta's the Atlanta Fed, they did revise their GDP estimates for the third quarter to the upward direction from 2.5% to 3%. You had to leave the, yeah, Beto. It's small. I haven't really gotten it. It was hard to get fills on, so I only have a little bit of it. And again, team, make sure you guys are hitting that like button on the way in. Helps out spreading these streams out to some more people over here. And yeah, I mean, this is a good time for it too. You guys know the deal. Everybody gets 2 weeks free to the newly launched Discord. If you guys aren't in there yet, having fun, making money with us, make sure you guys check that out. The 2-week free deal is going to be ending soon. You guys get all the courses, all the watch lists, all the private streams, the macro research reports, which there is going to be one this weekend. The single stock research reports. Honestly, guys, you guys have seen the results of it. If you aren't in there yet, heavily consider coming in, trying it out for 2 weeks free. If you don't like it, you can just leave. So I'll throw that link in the live chat here for you guys, but let's get back to it. And honestly, guys, the messages that I see from you guys and the results from in there are just insane. But let's see. I did tweet out a couple of things about kind of my expectations here. I think they should do a 25 basis point cut, not 50. That's just my view. We've talked about that a lot in the videos here. The risks that you have with USD JPY, the dollar. And additionally, this is another thing that we should talk about here as well. Everybody and their mother has been asking me about TLT recently. And I've been tweeting about this a little bit. Right now, I think that the long TLT trade is overly crowded, and it's a bet on not necessarily just a soft landing, but a perfect landing. Because think about the market like this. We already know, and we've seen it in a lot of the probability metrics. Let's see. If what do you call it? If we already know that the rate cut probabilities are pricing in so many cuts over the next like 6, 8, 12 months here. Well, if any piece of economic data comes out and does not fit that narrative, this is going to be a rough move down in bonds, upward in yields, and TLT would move back to the downside. Right now, to me, is not the time to go long bonds. And again, you can think about it like this. It's too obvious. People were trying to tell me yesterday on my tweet, they were like, but the 2-year yield is telling us that the Fed is behind the curve. That's literally the point. They've priced in too much to the bond market. So in order for them to continue, in order for bonds to continue upward and yields to continue downward, you need them to price in even more cuts. So you would need inflation to really come to the downside, unemployment to skyrocket, and growth to slow. That's what you would have to see. On the other side, it's like the most obvious thing is like, oh, the Fed's going to cut rates. Bonds must go up. But then that goes back to the earlier point that they've really already priced in a lot of this bond movement anyway. So I'm not really the biggest fan of going long TLT right now. But let's see. How you guys doing today? You guys have a good day in the market so far? You guys have a good day in the market? Hopefully you guys didn't do anything. I can tell you guys my super secret, top secret pre-market plan that I sent out to everybody. I do send out the pre-market plans with the zones every single day. Well, not this week. Well, Monday, yes. But since we had rollover, there was really nothing to do. Kind of mess with the charts a little bit. But the secret, super secret, like high-level security clearance pre-market plan today was don't touch anything. That was the pre-market plan. Don't do anything stupid, guys. Again, it does not make sense to do anything before Powell. The market is still going to be here after Jerome Powell speaks. It is your job to make sure that your account is there as well. Oops. That is your job. Please don't do anything stupid. So, market flying around here, doing a bunch of crazy things. We've got what? About 21 minutes to go until the interest rate decision and the SEP that's going to be coming out, which I'm going to be paying really close attention to. That I think is going to be the most important part of this FOMC meeting. And again, you got to look in places that people just don't either know how to look or fail to look at. The SCP is really important this time around. Let's see. Keeping it simple. Exactly. Well, I mean, we can go over the day trade from Monday. That was nasty. From this zone right here, you guys saw this one. I mean, I can throw it back on the 2-minute, show you guys this. This was disgusting. These zones that I send you guys, we just need a couple more of these zones to form. But this was a really good one. It wasn't the craziest trade in the world here, but it was right here. Boom, boom. This was the one that I recorded and posted on Instagram for you guys. So to that first TP, it was only like a 1 to 2. I was hunting like a 1 to 4.5 there. Up to that high, that was a good one. And then I actually ended up scalping it out of this zone here too, which was fun. But yeah, we're gonna for those of you guys in the Discord next week, we're gonna be doing that webinar on those rejections and reversals out of the zones, so that when I send them, you guys will have a better understanding of what to look for there. Because again, I mean, we've had those reversal videos out there, which is a lot of what we're doing out of those zones, but just having a nice webinar in there for you guys is gonna help you out a lot. Flat for the day, less than $100 of exposure. Yeah. I mean, I wouldn't really do much today. It doesn't make sense to. I tweeted this out too. I was like, it's like trading's fun. Powell is fun, but it's sad knowing that so many people are about to lose so much money. It really is. All of you guys are so many people are just too focused on trying to make money, like too short term, and they just fail to realize that it's all about building the skills to be able to do this forever. Once you build the skills and once you see what you should be doing in the market, you can't unsee it. So, but yeah, and then I'll also have another YouTube video coming out for you guys this evening, recapping everything. So again, if you guys don't have notifications turned on for this channel, make sure you guys do. Let's see. Short Tesla? I wouldn't do that. I wouldn't be doing any of that. Members only jackets. Oh, is that a thing? Is that why you guys were saying that this morning? Interesting. You're so behind the curve. Apparently, so is just like the Fed, man. Just like the Fed. All right. Dude, I really like Mara here. Yeah, those of you guys that joined the broadcast channel on Instagram, I'm gonna be like sending you guys to some of those trade ideas. It's the same ones that are gonna go out on Twitter. Same ones that are gonna go out on Twitter there, but Bitcoin looks pretty nasty here. Nice to see you. Nice to see you guys too. I mean, I told you guys the live streams are now all private for those of you guys in the community there, but you guys still get the daily YouTube videos. You shorted Palantir at 36 and you're getting cooked. I mean, I wouldn't short it, but if it goes back down to like 34, 32 around there, we talked about that this morning. Yeah, I'm gonna buy some. I'm gonna be buying some. GME to 8. I don't know, man. We can take a look at it, but it's just I mean, that's aggressive. To 8, that's pretty aggressive there. If it's gonna run big time, I'll let you guys know. I did call this move in here. So come on. There you go. What do I think about the FOMC? I think they should cut 25, but they might. There's a good percentage chance that they're going to do 50. But what the most important thing is what is in the summary of economic projections and how is Powell's tone? Is he hawkish? Is he dovish? Is he overly hawkish? Is he overly dovish? Is he going to be very neutral? You think FOMC is coming up soon? Astute observation there, Daniel. But yeah, it's been an amazing week. Shout out to all of you guys that have been printing. I mean, I can just look at community gains over here for a second and just take a look. Like 67% on UPS, 113% on Airbnb, well, that's me. 111% on Airbnb, that's me. 163% on Visa, 82% on Airbnb, 109% on Delta. You guys are killing it, man. 21% on his entire account in a day. Shout out to you, Kevin. Jeez, man. Cam has been killing it. 184% on Mara. 178% on Mara. 126%. Oh, my God. Oh, my look. 6,000% on Oracle. There we go. No interest rate change shocks everyone. Yeah. Yeah. I don't think they're going to do that, though. 25 or 50 better for the market. It does either. It just, again, it depends. The rate, guys, the rate cut itself isn't what's important. And I tried to get this across to you guys on Twitter today. So make sure like you're following me over there. But everybody's going to talk about like 50 or 25. It doesn't matter. It doesn't matter. GBP USD looking bullish. Did I post that for you guys in the Forex section? No. There's a couple of them in there. I haven't looked at them. Something hit an alert today. I think it might have been GBP NZD. I don't know what happened with that, though. Carvana, what a monster. Yeah. That thing's... Is it running? That thing is a monster. But back to the earlier point, it's like 25 or 50 is not what's important. It's what's important is what's in the SEP and the context that the Federal Reserve provides to the cut. That's what's important. Screw the market, give Warren her 75. Well, if they do 75, the market's cooked. I don't think that Elizabeth Warren realizes that. That if they were to do a 75 basis point rate cut, the market would literally collapse. You're the man, couldn't have done it without you. Shout out to you, Kevin. Yeah, everybody, that deal is still going on. Everybody gets 2 weeks free to the community there. So if you haven't tried it out yet, seen what we're all about, the link is at the top of the live chat for you. But I'll throw it in here one last time for those of you guys that still need to hop in. But yeah, after that, it's going to go waitlist only. I like keeping the group small size, how it is. I mean, it's just filled with money. Everybody's motivated. We're on topic all the time. We do our work. We're done. We leave. It's easy. Super, super simple. You ran out of dry powder this morning, so you're playing puts on SQQQ because SPY looks like it's going to spike up. Ungroovy, if you traded so much today that you ran out of dry powder and now you're still trading on an FOMC day, you need to seriously reevaluate your goals in what you're doing in the market, because just quite honestly, that is not a smart way to be behaving in the market. We've all done absolutely nothing today. It doesn't make any sense to be trading at all today. Zero. You're loving the Discord. I don't have Instagram or X, so this is great. KP, shout out to you, buddy. Yeah, the reviews on there. I mean, seeing your guys' feedback and the gains that you guys have been able to make is just absolutely unbelievable. Let's see. Let's see what we get. How much time we got left? 13 minutes? $13 minutes? DM. Yeah, let me look. Forecast for the S&P. Oh, yeah. Median rate expectations. All right. Current year, 462. Wait, but we don't have the S&P. Did the S&P drop? I don't see it. Hold on. The S&P is not out yet. It shouldn't be out yet. Oh, expectations. Oh. Gotcha. Yeah, so low. Oh my God. 2875. Dude, they are pricing in so many cuts. Like so many cuts, man. Premium move super slow. Well, yeah, it doesn't make... The only thing that would make sense to do today would maybe be to trade futures, but it still doesn't make any sense. Today is the day to just literally do nothing. That's what we did. The ranges are larger. The IV is spiked. Doesn't make sense. It does not make sense. Yeah, exactly, Daniel. Exactly. Bitcoin's moving up there a little bit. Is Beto? Beto, there we go. That flipped. I mean, I highly doubt my contracts are moving, but yeah, no, they're flat still. I have a lot of time. You wish you would post a source for his info sometimes. It's probably coming directly from the terminal. That's really what it is. Oh, and again, team, as you guys are hopping in here, make sure you guys are hitting that like button. But most importantly, I have notifications for the channel. We've been posting the daily YouTube videos. I won't be able to get one out for you guys tomorrow just because I'm traveling. And then Friday, we don't have a private stream. But next week, 4 days a week, you guys are getting YouTube videos. You may have a tiny merit position. I'm waiting for it. I'm waiting for it. If it comes back above that 1673 area there, I'd probably be interested. I mean, I will throw another alert here at like 1659, but I am going to be very interested in Mara. I think this is going to be, I mean, it failed the first time. So, but I know a lot of you guys were slinging like shorter expirations on it. So you crushed it. Multi hundreds of percent able to make those free. And I mean, dude, you're not going to find that everywhere else. Where else are you guys going to have the ability to make 6,000% on the Oracle trade? Like, really? Did I grab June? Yeah, I grabbed the Junes. Really small. I want to do like 5 or 6 scale-ins to that thing. We'll just like throw a couple grand at it and then be done. Leave it and let it cook. Not good enough. We need more streams. All right, 9 minutes to go here. Ladies and gentlemen, if you do nothing, you're winning today. Exactly. Made 350. That's good, but again, it's very risky today to be doing anything. Very risky. We need 2-a-days? No. No. All right. This Wally move was awesome. That was so much fun. And then Viso was good this week. Neo was annoying, but other than that, I mean, crushed it. Fed pivot TLT move. I do not think TLT is going to continue. I really don't. I've tweeted about it. We've made YouTube videos about it. I personally do not think that TLT, and it's not going to get decided today. Like TLT could spike today. I mean, I don't care. But the thing is that betting on TLT right now is betting on a perfect landing and that the bond market is correct in its pricing that we are going to get all of these rate cuts. And here's a question you should ask yourself. When in the last 12 months has the bond market or any of these probability markets been correct about what we're going to get for rates? I'll tell you 0 times. And think about it like this. Think about the times that we've traded the bond market this year. It's every single time that they start pushing things way too far in one direction. So if you guys look at this TBT trade that we took right around, I'll show you right here. It's going to look nasty. But this right here was the day that I bought it. It was right around this area where we saw the Wharton professor begging for a 75 basis point cut. And it did not make any sense that the market was pricing in all of those cuts the way that it did. Long TBT, which is the inverse of TLT. I actually bought it on this day, sold it on this day. That trade could not have gone more perfectly. So now I actually do want to go long TBT again, but here's what I'm waiting for. Because remember, if the bet on TLT is a bet on a perfect landing, you have to then have a piece of data or a series of data points that will then show you, oops, that's actually not going to be the narrative. So then the bond market starts to react. But in order for that to happen, you need to get through the first or second cut. You want to try to make free? Yeah, and here's the other thing too. Like, it's not like we haven't been bullish on TLT. Like, I gave you guys the TLT position sub 85, which is literally right here. Or was it? No, this is April. It was down here. It was sub 85 in this area before it ran all the way up back into the zone at 100. So anybody that's in the TMF or TLT from when we did this last November is still doing well. I just don't think that it's going to get that continued move. We can make money here? Reaper. You know the deal, buddy. I mean, we can go over the what do you call it? The 6,000% Oracle trade that I handed out to you guys directly from the pre-market plan in the Discord. I mean, the 5-minute opening range break after the gap up on earnings just absolutely ripped. I got out of this one for I think it was 150%. It was a great trade. And then those of you guys that wanted to degen and hold it because you had every right to after you made it free. There was one guy that made $22,000 on this one trade. My prediction on GBP USD. I'll tell you. If it looks good, I'll tell you. It actually doesn't look bad. I mean, if this consolidates here, the dollar weakens. If the dollar weakens here, I mean, you would see this thing rip. So who knows? But I mean, I don't trade Forex. The moves on it are really awesome. Like, I mean, if it did this, obviously I would be telling you guys about this. And that's like I do put the currency watch list in the Discord as well. You guys get those once a week. So that's in there too. The list of stocks, currencies, and cryptos about to explode before they do are always in there. Ulta was on there this week. Ulta was a really great one. I just had to cut it a little early just because we were getting into FOMC and I didn't really want to take that risk on it. So where's Airbnb Bizzle? Looking good still. We'll see what happens. All right, 5 minutes to go, ladies and gentlemen. You didn't sell the TLT contracts when you should have. That's why you still have them, but your shares are way up. Yeah, exactly. Even if it's like TLT or TMF, they're still great. You paper handed the Airbnb at 100%. Yeah, it's great. I mean, that's still a good trade. That's still a great trade. But yeah, I mean, if you guys want to hop in there, everybody gets 2 weeks free. So if you guys haven't done that yet, joined up with us, you get all the courses, you get all the watch lists, you get all the private streams, the pre-market plans with the day trading levels. Like, you guys see the tweets and the Instagram stories about how much success people are having, the reviews. It's like, if you're serious about there it is, James. So there's that link to hop in. But if you're serious about your long-term success in the market, there is only one place to be. Let's see what we get. Let's see what we get today, team. All right. I want the 10-year back on here. I want USD JPY. We've got 3 minutes here, ladies and gentlemen. Here we go. Market doesn't know what it wants to do. Well, it hasn't gotten the rate decision yet, or the SEP or anything. So what else do we want? I don't really want Mara. What did I want here? Oh, SMCI. I want to see how that reacts because SMCI is barely holding on here. So is NVIDIA, but these two look really nasty in a good way. So 3 minutes here. We will see. We will see, ladies and gentlemen. You're still quitting your job? Kev, I know. I understand you're doing really well in there, but you can't just quit your job. Like, this is the type of battle that we have in the community. People start doing so well that Kevin is just like, yeah, I'm going to quit my job and just do this with you. And I'm like, dude, you can't do that. Stop. ARM, is it still going? Because ARM, I thought, was starting to look good. Oh, yeah, I like it. Yeah, I like ARM here. MTH. I did look at it. It does look good. Daily looks good. Home builders could get interesting, but the 10's got to catch up there. So again, this was the prior setup on SMCI. It never validated. We still have these alerts here for it. If it does it from down here, this would actually be more fun. This is your job, Kevin. Like, this is the battle. And then Cole comes in, and Cole's been in with us for like, what, 4 months or something? And he's like, yeah, I think I'm going to drop out of college. And I'm like, dude, you can't do that. Like, stop. I know people call me a lizard. They're like, how do you find this? It's not that hard. But that doesn't mean that you guys can go dropping out of school and quitting your job. I know it all works really well, and everybody's having a good time. You can't be quitting your job. Like, unless you have like a full year's of expenses saved up and you can still have a nice size trading account. Your risk off for the news? Yeah, Alfie, I'm not doing anything. Did the SMCI controversy get sorted out? Sort of. The delay in their financial reporting right after that it more so seemed like they were just trying to make sure that there wasn't anything crazy in there versus them like hiding something. For now, we'll see. What's up, lizard? Just to stop. There's a couple rules. When you guys hop in, get your 2 weeks free to the community, there's a couple rules. One, I know you're probably going to do very well, but you can't go quitting your job or dropping out of school. Don't do that. That's bad. Don't do that. Think about it. You can work your job. You don't have to spend that much time doing this. And then you just what? And then you hang out. It's not that hard being a lizard. We're cold-blooded. Cold-blooded in the market. All right, 4 seconds. Here we go, ladies and gentlemen. It is time for the rate decision. Oh! It stalled out. Did they halt the market? Nope. Here we go. All right, ladies and gentlemen, let's see what we get here. The market is starting to move to the upside. Bitcoin is moving up. Beto is starting to move. Let's see if this move is going to be legit. We have Airbnb Bizzle running up there. Let's see what it wants to do. Fed cuts interest rate by 50 basis points. If you guys watched the video from yesterday, I told you. The Nikki leaks came to wow, the mark. And again, this is exactly what we were talking about. The market is not scared of 50. So what are these Airbnbs at right now? They've got to be ripping. They haven't even updated. They're only up 48. Oh, these are gonna, oh, the spreads just really widened on it. So these are gonna be up big, I think. I mean, it's running. Air Bizzle. Oh, it hasn't even taken out yesterday's high yet. Oh, I don't care. Whatever. Whatever. All right, now we got to look at the SCP, ladies and gentlemen. This is where things get really important. So we did get that 50 basis point cut. Now we have to go and look at the summary of economic projections. Here it is, right here. Let's pull this up, actually. Actually, I'm going to leave the market up here for you guys, and then I'll go through this over here and read it to you so you guys can still see the market here. All right, let's see. They revised GDP down. Whoa. June projection for change in real GDP for the year, 2.1%. They revised it down to 2%. So they're cutting. Okay, this is whoa. All right. Whoa. This is really interesting. Okay. So remember how I told you guys it wasn't necessarily as important of what the cut is, but the SCP is really important. Here's what they've done. The Fed has revised their GDP estimate down. So lower growth, 2.1% to 2%. Okay. The unemployment rate projection for this year went from 4% in June. That was their expectation then. Now it's up to 4.4%. Their PCE inflation expectation went from 2.6% in June up to down to 2.3% now. Core PCE in the June projection was 2.8%. Now it's 2.6. So what do we have here? The Fed thinks that things are worse than they were prior, meaning a little bit slower growth, higher unemployment than they previously thought, and inflation moving down faster than what they thought in June. That is the sole reason why we saw that 50 basis point cut. SoFi's moving. That would be really great if that happened. SoFi ripping to the upside there. This was another one from the private streams that we do with you guys. We bought SoFi down in here at around, well, you guys got it lower than I did, but I got it at around 655. Those shares are doing phenomenal. What's Beto's running? We got, where's Airbnb. Looking great there. And again, so those of you guys that have been paying attention to the videos, especially the video from last night, you fully understand exactly what we're looking at here. They priced 50 basis points. Did it knife? Oh, no. Well, hold on. USD/JPY is not moving that much. Did the dollar do it? All right. This is dangerous. The dollar is moving. Yields didn't move. I told you guys. I told you. This is the issue with TLT. Like, yields are not moving right now. Where's TLT? I would highly doubt TLT is doing anything. Nothing. Zero on TLT. Everybody and their mother is going to be on Twitter today being like, what happened to TLT? It's priced in, ladies and gentlemen. Be careful. The most obvious trait, and it's still coming down, yields are moving to the upside. This is exactly what we expected to happen. Look at this. Where's the market? That's a giant candle. How big is this candle so far? 26 points. Check out Penn. I'd actually be interested in Penn. That looks nasty. RKT is ripping. Let's see. All right, my Airbnbs are up like 60% here. That's pretty good. But I hope everybody understands this now. Like, that's almost all I wanted to see. I almost don't care what Powell says now. I really don't. I genuinely don't care. There's why? Why would we care? Dollar needs a parachute. Yep. Where's gold? That's a rip on gold. Look at this. That's a rip on gold. Wow. Lows. Oops. I wouldn't do anything on this, but that doesn't look bad. SMCI holding. I'm guessing NVIDIA is now going to hold it off here. NVIDIA is now going to be a top target of mine. That looks really dirty here. UPS looks good. No, I know, guys. Morrow, yeah, everybody, we've been talking about UPS in the private streams. That was another candidate for us. But yesterday, when we were with you guys in the Discord, why did we not take it? FedEx's earnings tomorrow. So that kind of throws a wrench in that one. Spot gold rises after U.S. Fed rate decision, last up 0.5%. We got our 50 minutes already out. Throw it into, I don't have an LLM. I mean, I could throw it into ChatGPT. I pretty much got everything I needed from the SCP right there. That's all we needed. That's everything is okay. So now you, okay. So this is setting up the TBT trade. So it's actually the other way. And people don't realize this. The bonds are probably going to move the other way. I mean, yields just came back down. They're going to be volatile here. Where's TLT? It's doing its thing, but CCJ, yep, Ralph, we were talking about this one. Oh my God, yeah. Oh, all right. You guys are getting all these goodies for free right here. Oh dear. When's FedEx earnings? It's up right now. Tomorrow night. Tomorrow night. So is Airbnb going to take out those highs yet? It's close. Yesterday's high in Airbnb 124.74. Where's the market? Spot gold as gold as a nasty setup. Silver, I bet it would as well. All right, what else we got coming through here? Yeah, it's just they're just going through some rate expectations here. So Fed officials median view of the Fed funds rate at the end of 2024, 4.4% versus the previous 5.1. Median view of Fed funds rate at the end of 25, 3.4%, previous 4.1. So now the Fed is saying we're probably going to cut more. But how does that compare to market expectations? It's about the same. It's about the same. So where's Beto? It's a good start. I mean, we'll see what happens with it. I like how it looks now. I might see if I can get some more. US. Wow, this is interesting. Here we go. US. Where is it? Oh, I missed it. Come on. Where'd it go? US rate futures price in 64% chance of a 25 basis point cut at the November meeting. There we go. There we go. All right. So in about 23 minutes here, ladies and gentlemen, we are going to hear from Jerome Powell. He's going to be speaking to us, and we are going to have a very, very interesting YouTube video tonight. So make sure you guys have notifications turned on for this channel here. The video will probably drop at like, I don't know, 6:30 p.m. Eastern. Something like that. Something like that. But yeah, let's see. I mean, this could end up just being a dud. Who knows, though, because Powell could say something. Okay, it is still important what he says and what his tone is. He's not going to be a hawk, especially with the revising down of the numbers in the SEP, the summary of economic projections here, in everything. You had unemployment go or up, actually. The unemployment rate projection went from 4% to 4.4. The June projection for GDP was 2.1. Now it's 2.0. And that's coming after the Atlanta Fed revised up their GDP expectation yesterday from 2.5% to 3%. We already had a 2.8% reading. I think it was 2.8 for Q2. We had 1.4 for Q1. So it's not that big of a difference, but the PCE number is pretty interesting here as well. You had the June projection at 2.6% for the year, and now it's at 2.3. So they do see inflation. But actually, so they see it getting back down to their 2% long run target in 2026. You could easily see it though in 2025, because at the end of 25, they're projecting it to be, or for all of 25, sorry, about 2.1%. Premium just burning up on bought options. Yeah, 100%. 100%. You got to be careful. 100%. But yeah, hopefully you guys have been learning and understanding, getting a good picture of the market from these videos here. It was everything that we were saying was going to happen. Everything. So we're going to have some, those of you guys in the Discord, if this holds here and it doesn't just, the bottom doesn't drop out of this, we might have some of the best setups of the entire year coming up. And you've seen some of them, but they are about to be disgusting. I say that even though we came off of the Oracle 6,000%. Well, yeah, I know, Ralph. I know you sold some. Those are good. I'd love to see Airbnb come out and take this high. That'd be nice. 124.74. We'll see. I don't know. I like where it is. I mean, these contracts have some time on them. That's why I got them with more time, just because we were going into Powell. Nvidia, I'm really excited about this one. SMCI, really excited. Where's Amanda over here? AMD looks decent. Looks really decent here. Affirm if it holds. Dude, I actually might send you guys another ticker list tonight. Discord team. I might, after today, after I do the video and everything, I might send you guys a new list. If things hold, it depends. Because everything, it's possible that things do change after Powell speaks. That is a possibility. So just be aware of that. What setups are you talking about? Well, you've seen some of them. I mean, Nvidia's one, SMCI is one, Mara is one. There's like, I'm thinking in my head right now, there's like 15 of them. So we'll probably talk about them tomorrow on the private stream, though. So market moving back down, nothing crazy though. I like how I'd prefer this to be a dud, and for it not to go wildly up or wildly down, just so that the setups hold. But we'll see. It depends. It depends on what happens here. Dollar moving back up. What are yields doing? CCJ, I really like. That's another one. Uranium. Are yields up? Yep. Yields are coming up, team. Yields are coming up. All the people that are gung-ho heavy on TLT right now, they are making a mistake. They are making a mistake. So now we just need data. And it's next week actually could be it. Next Friday we have PCE on Friday. So that could be the piece of data that if it comes out slightly hot, that's TBT Central. Yields are going to rip if that happens. Bonds would tank. To VWAP. Is that where they're going to balance it out? Oh, we're slipping. We're slipping. And it's a dud so far. So we'll see what happens. Powell could wake things up a little bit in about, what, 17 minutes here? Oh, is it? What's the 210? What's the, hold on. Hold on. What is it? Did it uninvert? It came down a little, but I don't think this is live, but it's still uninverted. It is still uninverted right now. So we'll see. This looks interesting. There was another ticker we looked at today where I was like, yeah, that looks really good, but it needs to balance out. What was the one where I said it needed to roll over a little, guys? Do you guys remember what that ticker was? There was a ticker where we were talking about it where it looked like it was just bear flagging, and I was like, I don't want to touch that. But if it rolls a little and then flatlines, I'd be fine with it. Does anybody remember what that was? Because I forget what it is. This is interesting. The initial move's been higher. You're coming down retesting. You could easily just push today at some point. This could get real. What's the distance here? Oh my God, that's like 20 points. That's nuts. Does anybody remember what that ticker was from the private morning stream? I don't remember what that was. I just forget. Oh, it uninverted and it's accelerating? Really? Can I do it on this chart? I think I can. No, it uninverted for a second, but now it's back up. If this is correct. I mean, we can just look at the yields. We just look at the 10-year versus the 2 years, the 10-year higher or lower. Ten years at 3.661. Yeah, 10 years higher. Okay. Was it ZS? It might have been. No, it wasn't Zscaler. It definitely wasn't KDP. It was not that, but that looks that looks interesting. Look at yields. I did. The 10's higher. The 10's at 3.661. The 2 years at like 3.5. But it did, for a second there, it did uninvert. And now it's moving back the other way. So, yeah, we'll see. 2 years going down. 10 years moving up. TLT. Oh, the dollar's getting nasty. I got to look at USD JPY now. TLT's up, but I don't really see that being a sustained move, especially with the data coming out. And then USD JPY, we got to take a look at that. It's dangerous, but it's not the worst thing in the world. Oh, it might have been Celsius. You might have been right. Yeah, it's Celsius. Thank you, Romeo. Thank you. It was Celsius. Yeah, it's this one. Celsius, I do like if it can consolidate from here, but it's not perfect. So, and then where's that UPS that I gave you guys? Some of you guys took this one above here. Somebody was up on it like 70-something% this morning, I think. Congratulations to whoever that was. That was another good one. I think Bitcoin's moving back to the upside here a little bit. Where is Bitcoin? It's got to be well over 60K right now. Yeah, 60,400. I mean, that can change in a matter of seconds, but Bitcoin's over 60K. Market moving back up a little. Physical gold is pumping. It is. There's a lot of different reasons for that, but we've been calling, I think, what was it, 2 weeks ago I gave you guys gold. It just gapped over us. So, I mean, I could have traded the 5-minute opening range on it, but I just decided not to. There were so many other better setups. Like, think about it, guys. Think about what we've done over the last 2 weeks. Did we really need to add gold into the mix too? I mean, it would have just added to the gains, but it's not like we really needed to do that. Airbnb looking for 124 again. That'd be nice. Tomorrow's going to be interesting. Friday's going to get interesting. And Powell's speech is going to be very interesting as well. Hims, yeah, I got to look at that more because I've heard some things about it that I'm not the biggest fan. Dude, I'm telling you guys right now, the setups that I'm about to send all of you guys in there, even the ones that you're bringing up right now, are so dirty. Like, they are so Hey, if you guys don't want to make money, don't make money. But this is going to be really fun. You guys have seen it before. We're about to go on another insane tear, I think. So we'll see. Market's got to hold on today. That's what we need. All right. I'm hopping into the FOMC YouTube live stream. Let's see. We got about 11 minutes here. Nope, didn't need gold. Less trades, more profits. Exactly, Kimberly. Yeah, it's been fun. Shout out to you. You've been killing it. Everybody that I see has. It's been insane, man. But yeah, I mean, I'll throw the link in here for you guys. Everybody gets 2 weeks for free. So if you don't like it, you can just leave. You guys can just leave. Probably not going to benefit your portfolios to join and leave. But hey, if you guys want to keep losing money, keep doing it. The GDXJ mentioned this morning, shares only, but yeah, that's a good one. I probably need some exposure on that. Actually, I'm going to look at something right now, and I'm probably going to get disappointed. I'm not that disappointed. Where's SoFi? Because I do own some of this. There we go. I mean, SoFi hit a high from like since we bought it down here. I wanted it on earnings to fall more below 6 so I could buy more of it, but I wanted it in here just to have it. But that's a really great starter on SoFi there. So, I mean, that's another benefit of being in there. You guys get my single stock analysis too. Boom. This is a really good one. What am I up on these shares right now? Where it's like 655. So right there to here. 27% on the shares. That's pretty good. That's pretty good. In what? 2 months? That's great. What's included within the 2 weeks? Everything. You get access to all the courses, all the private live streams, all the pre-market plans, all the watch lists of stocks, forex, and cryptos about to explode before they do. What else? All the prior research reports that I've ever made, like when I predicted that Japan was in July was going to cause everything to capitulate. You get everything. It's not like you restricted access for the 2 weeks. You get full access for the 2 weeks that you're trying it out. Your SoFi is outperforming your RKT? Yeah, I think it is. RKT's been good though. I think SoFi was just more beaten down. I don't know when you bought the RKT though. You wish you have gotten PM as well. Your Palantir at SoFi have been killing it. Yeah, Philip Morris was another one that I gave you guys, but I think it turned around today a little. Yeah, Philip Morris moving to the downside here, but I mean, I gave this one to you guys back in here. So this one is probably still up 20 something percent. Dude, 27% on share. That's beating my SoFi. That's crazy. And it pays a 4% dividend. That's crazy. You're welcome, ladies and gentlemen. All right, what do we got? Airbnb, how's that looking? It's all right. I still like it. We got 8 minutes for Powell. TER. That looks nasty as well. Dude, there's so many setups. Like, it's going to be one of those times. You guys remember for like the first like 6 months of the year where like there were so many things that were just firing off all the time that we had to be very picky of what we took. We couldn't take everything and everything was printing. It looks like it's going to do it again. Riot's breaking out. Yeah, where's Mara actually? Riot is breaking out there. Where's MSTR? Yeah, but Bitcoin's not. Why is Riot moving like that? Yeah, I don't know if I'd touch this. I mean, even if you were to do this, like even if it were to look like this here, you'd have some decent risk to reward up here. I mean, it's like a 1 to 3.5 probably. 1 to 3.8. It's not bad. It's not the best though. And it's a dividend aristocrat. Yeah, dude. That idea was one of the best ones of the year. Palantir was the best idea of the year in the 14-15 area. That was a great one for you guys. I'm just pissed I don't know more of it. Every day. Spy and Vood divvy payouts this Friday, I think. Ooh, that'll be interesting. Airbnb back above 124. That's nice. And then where's Beto? That's looking good. Got this like nasty trend line on it, but we'll see. And again, guys, if you haven't already, if you wouldn't mind hitting that like button on your way in, helps me out a whole lot spreading these streams out. I mean, you guys know the deal, the YouTube videos. If you guys haven't seen the YouTube videos, make sure you guys check them out. A lot of value in those. GBP CHF. Did I give you guys that one this week? No. What is that doing though? That one looks good. What did this do? That one never validated. That one never did either. Must have been a different one. Was it this one? Yeah, I think it was this one that went a little bit, but then came back down. I mean, the RR on it would have given you like a 1-to-1. All right. What else do we want over here? Beto. Your average on Palantir is 9. Dude, nice. MP. Oh, I was gonna ask you if you got the MP yesterday. Is MP still going? It's still going there. Yeah, that's a good one. That's a good one there. So yeah, I mean, you guys know the deal at this point. Oh, Airbnb. She's trying to move. Is the market moving here a little? Nope. Airbnb's catching a little bid. Uber. Yeah, Uber, I think I have alerts on. If I don't, I'm an idiot for not having them on. Yep. So, I think yesterday was the day where I was looking for it to consolidate more, but that wick kind of broke things a little bit. But yeah, Uber, that if this thing gives us a setup, I mean, we'll obviously know about it. This post earnings move was great. We've had some great trades on Uber. That one was a little strange, but this was a great one. I mean, there was one point this year we had like a 450% Uber trade and a 450% Tesla trade on the downside. Happened at the same time. It was epic. You never kept it. AMAT. More consolidation there. I would like that. Airbnb is looking for that high now. Gold ripping. Yeah, these premiums are a little strange right now, but that's fine. They're still up like 53%. So let's see what happens with Airbnb. You want ASTS? That's been a ticker that a lot of people have been looking for. It's not my favorite. I mean, this move in here would have been great, but like if Airbnb alerts and starts going above these levels here and the market starts to go, Airbnb could be a real fun one. We'll see though. You just started trading in the last 12 months, really have gone from 1% a day goal and losing your portfolio to less trades, more profits, and gaining it back. Thanks, STV. Romeo, shout out to you, buddy. That is what it's all about. I mean, that's why I named the community Less Trades, More Profits, because that is how you have long-term success in the market. It really is. So I'll throw the link in here one last time for you guys to hop in, get your 2 weeks free to the community. If not, I mean, it'll be pinned at the top, but we're going to get ready to listen to Powell here. So there's a link for you guys, but yeah, let's get ready for Powell here. We got 3 minutes until Jerome is going to be popping on the screen for us here. Yeah. So let's see. This is going to be a really fun afternoon. Yeah, see, that's what I'm saying, Alfie. Like, if it does it from down here, the trade could be even bigger. That's why I like it. Airbizzle, come on, 30 cents. You can do it. You can do it, Airbnb. I trust you. I don't actually. I don't care. It could go to 0 from here, and it would not make a difference. Crowd starting to set up. Let's see. Yep. $3 a share. Why'd you sell them, random? Oh, I don't think Palantir was ever trading at $3. If it did, I'm gonna really be upset. But I highly doubt that. It was literally in the 6s. Oh my god. I'm gonna lose my mind. SoFi, you're up. SoFi, it's your time to shine over here. If Tesla can break 235. Yeah, Tessie, I think we're interested in, right? Yeah, a couple more days. A couple more days on Tessie, and I can give you guys another, like, this was the big Tesla trade I gave you guys there. That was epic. That was really epic. So we're gonna find more. Like, and the ones that are setting up now are pretty nuts. Let's see. Airbnb taking off. Yeah, there's the alert. I kind of want to hold the whole thing. Like, I do have limit orders on it. These are up 71% now. I'm gonna be very aggressive with these scale outs. All right. I'm gonna be aggressive. They're up 71% right now, which is good. 72. Oh, 230. Do we have Papa? Oh, hold on. I see the podium. All right, guys, let's do it, team. Everybody hit that like button on the way in. We are getting Jerome Powell right now. It is going to be fun. Oh, I see him.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand in the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance. And we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals.
This looks pretty good.
If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed that made the committee go 50? And how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
Great question.
So, okay, a lot of questions in there.
He just asked the entire thing.
So, since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. So we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and
How
third?
do we make this, sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So, a couple things. A good place to start is the SEP. But let me start with what I said, which was that we're going to be making decisions meeting by meeting, based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. And I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Good, Chris.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect in the base case to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that. And that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%. Inflation's down to a few tenths above 2%. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment, moving to a more sustainable level. So that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard.
Howard Schneider with Reuters. How close was this in terms of the decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open. And I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance as sort of follow up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year?
Yeah, we're gonna take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start, but. And I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Gina.
Hi, Chair Powell. Gina Smilik, the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Then why cut 50?
Sorry, Nick.
They just said Nick. It's probably Nikki Leaks.
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions there, but so I would say we don't think we're behind. We do not think we think this is timely. But I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably under 2%.
Why cut 50?
So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, "Oh, this is the new pace." You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby.
Thank you. Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply? Or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too. And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018, 17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that. And we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
We're going to be watching all of the data, right? So if as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So, and policy, we think, is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment, and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with this inflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one, probably. You're at 4.2%. That's, I know it's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. We're adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be their wage increases, rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is. So we feel good about that. Vacancies per unemployed is back to, but it's still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person, as measured. It's now around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, I could go on and on. There are many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change particularly over the last few months. And, so what we say is as the risks, the upside risk to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get a second jobs report on the day of the meeting, I think. On the Friday before the meeting. And inflation data, we'll get all this data. We'll be watching. It's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I think we are. It's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But
who would have thought?
It's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
Thanks, Chair Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. And some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question. You mean after we get through all of this? It's just a great question that we can only speculate about. Intuitively, most many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates. And it looked like the neutral rate might even be negative. So there was people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But honestly, we're going to find out. But it feels to me and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. It's again, we only know it by its works.
One more. How do you respond to the criticism that will likely come that
You
a
said
deeper
that
rate
twice.
cut now before the election has some political motivations?
Yeah, so this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed, and I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind. And, it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
Jolene.
Thank you, Chair
Whoa,
Powell. I'm
isn't
Jolene
that
Kent
cool?
with CBS News. And my first question is, very simply, what message are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say that, the U.S. economy is in a good place, and
He said it
our
again.
decision today is designed to keep it there. More specifically,
it's
the
not.
economy is growing at a solid pace.
Oh my
Inflation
God,
is
why are
coming
you
down
saying that again?
closer to our 2% objective over time.
It's
And the
political.
labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy. And we'll do that by returning rates from their high level, which has really been the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
Good question.
No,
Oh.
we're not. So inflation, what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see it be, around 2% and close to 2% for some time. But we're certainly not we're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress that we have made.
Hi, Katerina Saraiva with Bloomberg News. I just would love to know kind of how the committee is thinking about the persistence we've seen in housing inflation. Do you think you can return to 2% with housing inflation where it is?
So housing inflation is the one piece that is kind of dragging a bit, if I can say. We know that market rents are doing what we would want them to do, which is to be moving up at relatively low levels, but they're not rolling over. The leases that are rolling over are not coming down as much, and OER is coming in high. So, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into this, but the direction of travel is clear, and as long as market rents remain, relatively low inflation over time, that will show up. Just the time it's taking now, several years rather than just one or two cycles of annual lease renewals. So I think we understand that now, but I don't think the outcome is in doubt. Again, as long as market rents remain under control, the outcome is not in doubt. So I would say it's the rest of the portfolio, or of the elements that go into core PCE inflation have behaved pretty well. You know, they all have some volatility. We will get down to 2% inflation, I believe, and I believe that ultimately we'll get what we need to get out of the housing services piece too.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more. You know, what's the likelihood of that, and how would you react to that?
So the housing market, it's hard to game that out. The housing market is in part frozen because of lock-in with low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not, you know, obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult. And, you know, where are we going to get the supply? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria.
Hi, Victoria Guida with Politico. Just following up on some of the labor market talk earlier, you know, monetary policy operates with long and variable lags. And I'm wondering how much you see being able to keep the unemployment rate from raising too much comes from the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
So you're right about lags, but I would just point to the overall economy. You have an economy that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to market participants, I mean, you know, business people who are actually out there doing business. So I think, you know, I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, you know, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but you know, we might well have. I think that's not, you know, that doesn't really answer the question that we ask ourselves, which is, let's look, you know, when at this meeting, we're looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? We knew it's clear that we clearly, literally, everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Elizabeth.
Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say, you know, that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restricted. We expect that process to take some time. as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households?
Well, what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation. And when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. We just keep it low, keep it stable. We're restoring that. So what we're going through now really, it restores, it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on. And I think we've made real progress. We don't tell people how to think about the economy, of course. And of course, people are experiencing high prices as opposed to high inflation. And we understand that's painful.
Greg.
Hi, Chair Powell. Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming into the blackout, there was like an open thought of 25 or 50. The Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this, but I mean, could you talk, would you have cut rates by 50 basis points if the market had been pricing in like low odds of a 50-point move like they were last Wednesday? After the CPI number came out, it was a really small probability of a 50-point cut. Does that play in your consideration at all? Just talk a little bit about that. Thank you.
We're always going to try to do what we think is the right thing for the economy at that time. That's what we'll do. And that's what we did today.
Simon.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You've mentioned how closely you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.4 basically being the peak in the cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
So we will continue to look at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright line. It will be, the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move that would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about is our policy stance where it needs to be to foster over the medium term our mandate goals. Yeah, so I can't say we have a bright line in mind.
Matt Egan.
Thanks, Chair Powell. Matt Egan from CNN. I know that you discussed earlier how the Fed does whatever the right thing is and nothing else factors in. But in general, can you talk about whether or not you believe a sitting U.S. president should have a say in Fed decisions on interest rates? Because that's something that former President Trump, who obviously appointed you, has previously suggested. And I know the Fed is designed to be independent, but why? Can you tell the public why you view that so important?
Sure. So countries that are democracies around the world, countries that are sort of like the United States, all have what are called independent central banks. And the reason is that people have found over time that insulating the central bank from direct control by political authorities avoids making monetary policy in a way that favors maybe people who are in office as opposed to people who are not in office. So that's the idea, is that, and I think the data are clear that countries that have independent central banks, they get lower inflation. And so we do our work to serve all Americans. We're not serving any politician, any political figure, any cause, any issue, nothing. It's just maximum employment and price stability on behalf of all Americans. And that's how the other central banks are set up too. It's a good institutional arrangement, which has been good for the public. And I hope and strongly believe that it will, continue.
Kyle Campbell for American Banker. Thanks for taking the questions, Chair Powell. A couple regulatory developments in the past week that I want to ask you about. First, last week, Vice Chair for Supervision, Michael Barr, outlined his views for the changes to the Basel III Endgame. I'm wondering if you are in alignment with him on what those changes should be, if those have support on the board in a broad way that you're looking for, and if you think the other agencies are also fully on board with that approach. And then yesterday, other banking regulators.
You know what? Hold the second question.
Okay, sure.
We'll give you the second question. So the answer to your question is that, yes, those changes were negotiated between the agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about, and then take comment on them. So yes, that is, that's happening with my support.
Is there a date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate changes. That we don't have a calendar date for that. And as for the other agencies, the idea is that we're all moving together. We're not moving separately. So that I don't know exactly where that is, but the idea is that we will move as a group to put this again out for comment, and then it'll come. The comments will come back 60 days later, and we'll dive into them, and we'll try to bring this to a conclusion sometime in the first half of next year.
Right. And then yesterday there were merger reform finalizations from the other bank regulators. What does the Fed have to do to align itself on merger?
I would bounce that question to Vice Chair Barr. It's a good question, but I don't have that today. Thanks.
Okay, Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate growth. Even though the policy statement says you view the risks to inflation and job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about the job market and growth than inflation? Are they not roughly balanced?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor shortage. So very hot labor market, and we had inflation way above target. So, that said to us, concentrate on inflation, and we did for a while, and we kept at that. The stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today was, I think we made a good, strong start on that. I think it was the right decision. And I think it should send a signal that that we're committed to coming up with a good outcome here.
Is the economy more vulnerable to a shock now that could tip it into recession?
I don't think so. I don't, as I look, well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a recession, of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at very solid levels. I don't really see that. No, thank you.
All righty, ladies and gentlemen, that was a very, very, very interesting meeting. TBT, guys, if you've been following along with what we've been talking about in the videos, with what we talked about in TLT. Oh, I actually made the research report in the Discord for you guys about that. That's literally what the last research report was about. It was not buying TLT, even though it looks really good. So we'll see what happens with this. I mean, bonds are getting hammered over here. TBT is moving to the upside. I didn't get anything on it yet. I'm going to wait and see over the next few days, just kind of how things shake out. Try to get a really good entry on this one. But we are going to have a very, very, very interesting video for you guys tonight. There's a lot of info. I have been tweeting a couple of things to some of my thoughts throughout FOMC there. One of the interesting things is when Powell said that they considered rate cuts in July, but now they're really the big move in the SEP was unemployment. Well, they probably would have given us a cut in July if the unemployment data wasn't fake. When we had that giant downward revision. Look at TBT go, ladies and gentlemen. So I don't have it yet. I think this is going to be a really interesting one. I know somebody in the Discord over here grabbed the TLT puts. Great work. Josh, shout out to you, buddy. That is awesome. But yeah. So, ladies and gentlemen, that is going to wrap it up for today. Remember, everybody gets 2 weeks free to the Discord community. You get all the educational courses. You get all the private live streams. The watch list of stocks, forex, and crypto is about to explode before they do. The macro research reports where we talk about things like this, the single stock research reports, the pre-market plans. There's a lot in there. I do a lot for you guys. So again, if you guys want to really come to the only place that's going to give you the tools that you need to have long-term success in the market, here you guys go. But I got to make this video for you guys. I got a lot of stuff to do this afternoon. So be on the lookout for that video coming out later. There's a couple of interesting points I want to make here. Oh, you got in at 28.98, that or 28.96. Nice. That's great. But yeah, pumping now. Let's see what we get. The market's about to get really interesting. I mean, we called that TBT move to a T. So I'm going to see if I can get a cool entry on it over the next couple of days here on a retest. But that's what we're going to be looking for, everybody. So I will see you guys a little bit later. I'll probably hang out with you guys in the Discord too. So, all right. Peace.